Quick shout out to today's sponsor, Algorand. We'll hear more about their AlgoKit 3.0 and how it's built to supercharge your app development on Algorand later on in the episode.
Nothing said on 0x Research is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and any views expressed by anyone on the show are solely our opinions, not financial advice. Boccaccio, Ryan, and our guests may hold positions in the companies, funds, or projects discussed.
Hey guys, welcome back to another episode of 0x Research. Today I am joined by Carlos and Dan Smith from Blockworks Data. It's going to be a great app today. How are you guys doing? How are you feeling?
Doing great, feeling great. Start of a new week. We're recording this on May 5th, Cinco de Mayo. Got some tequila lined up for the episode. No, I'm kidding. No, it'll be good. It's be fun.
Yeah, doing great. Excited to dive into it.
All right, we'll save the shots for after the end of the episode. We can do those maybe off cam. Before we get into anything, as always, we have to shill the upcoming exciting Blockworks event, Permissionless, coming up end of June 24th through the 26th. I believe everyone here on this pod is going to be there. So get your tickets. It's 0x10 for 10% off. You can come out, see the folks from the research team, see the folks from around the industry. There'll be some great talks, some great events. And I'm hearing rumors again that the 0x Research little event area at the conference is going to be a ton of fun. Bach might be in a dunk tank. Dan Smith might end up in the dunk tank. We're working on the details, but 10% off. Link in the description.
Yeah, we also Westy's getting a lot of love in the 0x Telegram, 0x Research Telegram chat right now. So he'll be on stage giving a talk as well. So there you go. Come join.
Awesome. Come see us there if you can make it out, and we'll be excited to have you. So let's jump into it today. I guess before we go into the main topic, main dish, I guess I just want to probe you guys. We do this on every ep. How are we feeling about the markets at large, about crypto? I think there's a lot of pessimism on the timeline. I'm seeing Mippo trying to be very like anti-pessimism. I think some of the like crime season thinking has really like invaded the psychology of a lot of people in the space right now. And, maybe they're feeling a little bit lost. How are you guys feeling and thinking about the industry today and going forward?
Feeling good. Yeah, I definitely agree with Mippo's point that everybody's just like super mad. I tweeted something similar, just like the acknowledgement. I can't remember. Oh, it was actually right at the very beginning stages of the Zora stuff. Everybody was just like viscerally upset about someone tweeting something about a social application. And I don't know. It was just like that made me love Zora, to be honest. But the prevailing attitude is just certainly pessimism. I don't know. Like sometimes I was like, is this because we're all chronically online all the time, or is it because prices are bad? Prices like aren't that bad. I mean, some are, but I guess that probably has a lot to do with it. Like it's been said a million times, but Ethereum price lagging is definitely net bad for the industry's morale. Most people own ETH, and so that probably has something to do with it. I'm getting pretty bulled up on ETH, and at least relative to the past. We did an episode with John Charb. I kind of dove into some of the reasons why there, but I think it feels like all the right things are happening, right? The early stages were have the conversation, say the right words out loud. And then it's like, okay, create a plan around those words. And the last and obviously most important stage is execute on the plan that relates to the words you just said, right? And that's all about scaling the L1. Yeah, so I think Ethereum is kind of moving in the right direction, which is net good for the industry without a doubt. I think if Ethereum were to just like implode and die overnight, the industry would get shot back into the dark ages. So that's definitely a net good for not only morale, but also just for the industry as a whole. As far as markets go, it feels like we're very macro driven, and that is just not where my skill set lies these days. So at times like these, I try to just hold my coins and figure out the right time to rotate away from majors and into more risk assets, which for better or for worse, I just kind of ventured out into some risk assets over the last week.
Awesome. I think I largely agree with them that sentiment is mostly price driven, and you can see that depending on who holds what. And yeah, in terms of markets, you have seen like a huge divergence and like decreasing correlations. Like for instance, Bitcoin has outperformed, no doubt, and it has shown relative strength relative to current market conditions. I was checking the Sol ETH price this morning, and in April it made an all-time high, like, and it's like 44% up year to date, whereas against Bitcoin is still down like 25% year to date. So that just highlights like increasing divergence in market performance and just like a flight to fundamentals or quality from investors. And in the application layer, you see kind of the same thing where apps that have cash flows and real value to token holders through things like buybacks have outperformed in the past month or so.
Yeah, I think those are great takes all around. You can definitely see like there's some disparate feeling from ETH folks who are maybe down in the dumps, but also like very focused on this pivot idea, or pivot or not pivot, whatever they want to call it, to be honest. And then, you know, Fartcoin bros have been very happy over the past month. And like you say, like price is a big factor in a lot of the ongoing sentiment within the industry. So it's not surprising to see some of the attitudes that are persisting right now. But
it also makes sense, right? Pivoting is like inherently a challenging thing to do, and there will be pain. And like, so I don't know, everything like lines up. It all is logical and makes sense in my view.
Yeah, I think, and maybe the tough part is like, if you're making a pivot, you're making some kind of admission that your previous strategy was not the right one, like that you made a mistake. And so obviously like that, maybe that's like a hard pill to swallow for some if they thought that they were not, you know, on the wrong course or something along those lines. So, you know, I could see that just being a difficult sort of thing to contend with, but nevertheless, we move on. Let's get past the pessimism and we'll get to the optimism. Shout out to the 0x Research Telegram. If you're not in the Telegram, by the way, and you are an avid listener, check out the link in the description. But our very own Pepe Rodriguez, he had a request and we felt humbled to comply this week and talk about some Solana DeFi. The, you know, question being, or the point being, you know, love when you guys do deep dives. How about Solana DeFi trends, market share, roadmaps, anything goes. So I wanted to dive into that. No one better than Dan Smith and Carlos, our two main Solana guys, Gigabrains on the team. Let's get into it. Maybe a big like area to start is just the DEX landscape and some of the trends there. Something that I feel like you guys brought to light recently. I don't know if this was you, Dan, or someone else on the team, but some of the prop AMMs, and I think it may have been SolFi, is spin out or part of the efforts of Ellipsis Labs, who people may know previously from Phoenix Trade, and their like relative share of like stablecoin trading volumes on Solana. It seems like they've kind of been quiet for a long time, but it's interesting to note. Like I know we have some data on the site that I'm sure you'll pull up here at some point. But they've been capturing some additional market share, and I guess this trend like has kind of gone under the radar. I've not seen people talking about this until just recently. Like there's some news that like these prop AMMs, if we want to call them that, are you know, kind of starting to dominate some Solana volumes.
Yeah, it's a really interesting observation. So I'll pull up some data here to kind of talk you through the thinking. But from a high level, what these are basically, if you're familiar with Lafinity's style, where you have like an oracle priced AMM. So instead of you know, each individual LP actually moving their liquidity, you have an oracle that kind of manages this on behalf of the pool, and they're private liquidity deposits. So this is also pretty similar to Lafinity as well. Where the idea of you have like a very small amount of liquidity that you can, if you have an edge in pricing that liquidity and not requiring a trade to run through the AMM to move the price, right? Because like I think of a traditional AMM like Uniswap or Radium or whatever, if there's a mismatch between the pool price and like let's say a centralized exchange price like Binance, then there's an arbitrage that can be run through that, and that is generally toxic flow, and that is generally negative for LP returns. And so the idea here with these more prop style AMMs is you take private liquidity, you seed them within this AMM, and then you have the ability to use an oracle to price this pool. And again, you remove that toxic flow. And they do something pretty interesting. It looks like they're pricing the liquidity very, very tight, so a small price window. and then only quoting very thin. So it's very hard to push a large arbitrage size trade through these AMMs. So you're really only capturing retail flows. It seems to be the kind of the goal. There's only about a few days ago, maybe a full week ago now, where Ellipsis and Eugene Chen kind of said, hey, by the way, SolFi is us. For a while there, it was just like nobody really knew what was happening, and they're eating a pretty meaningful amount of total Solana volume. So I'll pull up this screen share here now, and we can kind of see some numbers around what exactly that looks like. So I guess we'll zoom out here. This top chart is really just total DEX volume across the entire industry. You can see the growth over the entire, just the Solana chain, not the entire industry. You can see that growth over the last 2 or so years. And then if we look down here at this chart towards the bottom right, we can see the growth in total DEX volume. And so specifically looking at SolFi's growth over the last 2 years, you notice they really only popped up around the end of 2024 in the October timeframe, and now they're already running about 12% of all Solana DEX volume. And it's very specifically concentrated to a few pairs. So if we look at Sol USD and stablecoin swap volume, this is where you really start to see their position rise, right? And so they're doing about a quarter of all Sol USD volume and somewhere around 20% of all stablecoin swap volume. So again, we see that with this new pool construction, you're really winning the majors. So it'd be interesting to see how this progresses into the more long tail assets like meme coins or any project tokens. But for the meantime, it seems very concentrated to the majors. And so Obrick and ZeroFi are also seem to be these similar style pools. No revealed ownership over those, but you'll see they both kind of play in similar waters. So Obrick seems to be dominating the stablecoin swap volume, where SolFi seems more focused on that more Sol USD pair. And then so if you add the three of these together, again, that prop AMM portion, we see that's about 50% in total of Sol USD volume and north of 60% on stablecoin swap volume. So again, we see all this activity is really dominating these subsets. But when we look more on like the project token side of things, again, that's really concentrated to, we'll see that this is Orca, I believe. Yeah, Orca and Radium still kind of dominate these volumes, with Meteora playing a very important role there. And then on meme coins as a whole, it's obviously Pump AMM, Pump Fund Bonding Curve, and Radium that win the majority of that flow.
I'm wondering, Carlos, from your POV, I wanted to ask this, and we talked about this a little bit beforehand, but this differentiation between large, very liquid assets and longer tail, largely memes is where you see more of the illiquidity, and probably would have more difficulty, performing this strategy on small multi-100,000 or multi-million market cap coins that fluctuate significantly. I'm wondering, for some of the dexes out there, like an Orca, even maybe a Lafinity, although they kind of fit into this model, I suppose, a little bit. But Orca, obviously Radium is now directly competing in memes with their own Launchpad. Are they all going to be forced to kind of fit to one side or the other here, lean harder into these long tail assets, or go after a similar strategy to what the SolFi team is doing?
Yeah, I think so. I think that's a fair framing. I think that DEXs will have to concentrate on one niche and dominate one specific sector. If we look forward and ask ourselves, is SolFi going to dethrone Radium and Orca and these traditional AMMs? I think the answer is that we will see two sectors develop, and that's going to be based on the type of asset. So for tail end assets like meme coins or on Pump Fund or other type of long tail assets, I think that traditional AMMs like Radium will maintain their dominance. The reason for this is that market makers, like professional market makers, will be unwilling to price these assets because it's too risky for them, because they can move very quickly and then they expose themselves to toxic order flow. So passive liquidity like that provided by a traditional AMM like Radium and PumpSwap are more efficient to handle liquidity for long tail assets. And today, meme coins make up more than 50% of Solana's total DEX volumes. So I think there's still a future for these types of AMMs in the Solana ecosystem. That being said, like for liquid markets, so for assets that require like highly concentrated liquidity, like the Sol USD pair, stablecoin swaps, LST swaps, I think this will likely be dominated by these like prop AMMs. The reason for that is that professional market makers can close the spread and provide better prices. Chris Jung from the meta aggregator Titan was giving a talk at Solana Crossroads in Istanbul. And he mentioned that from what he's able to see, like through the Titan aggregation routes, SolFi, ZeroFi, and these types of like prop AMMs are providing dramatically better prices for these like highly liquid assets. And I think that we will going to continue seeing like this trend of increasing market share for this type of like Oracle priced DEXs, if you will. So yeah, I think like it's bad for DEXs that are kind of like general in the scope and haven't like dominated one specific vertical. For instance, Orca doesn't like dominate one specific pair where you think like, okay, they're dominating like in this sector. Whereas for things like Radium and Pump Fund, like they obviously dominate like meme coins, and I think they can maintain their position because market makers are never going to be willing to provide liquidity to a 3-day old coin.
Yeah, and I think, Dan, if you show the project token volume by DEX, like that feels like probably a logical next area. Like we're already seeing success on Sol USD stable swap pairs, but like large project, I'm sure there's a power law sort of distribution going on there where there are some very large project tokens on Solana where you could perform similar strategies. You know, a Jito, name a few other tokens that are there, but that could make up a large, majority of those volumes that could steal a ton of this market share away from, I think, is where Orca still has some relative dominance.
Yeah, I would agree with that framing as well. Because that's the catch, right? When you start a new meme coin pool, the liquidity is distributed immediately into that pool, and then there are new pools that do crop up, but generally the initial pool will have the deepest liquidity. If you look at something like Fartcoin, which became like a prominent meme that spawned out of a meme coin launchpad, it's interesting to see that like the longer it stays small, the more fees that get moved through that initial pool, and then you have this actually if the price 10 100x's, you get this pretty decent amount of liquidity, especially in meme coin terms, around that asset. And to be able to do this more prop style AMM, you need to hold the asset. Now, there's things you can do to like de-risk your price exposure to the asset, like as the market maker, but that is like an extra layer of complexity that gets put on top of it. And so I don't think you're going to see it for the very, very long tail. It'd be interesting to see it at the project token level. I think that's a pretty reasonable place to move next for these prop AMMs. But then it'd be very interesting, and I don't know how realistic it would be to like move to those Fartcoin style memes that have hit some level of market cap or size that it starts to make sense to kind of play in those waters as those AMMs. I don't really know their intention, but that'd be fascinating to learn from. And Carlos, you mentioned the talk from Chris at the Crossroads conference. One thing you mentioned there, which is these look a lot like RFQs, right? Like Uniswap-X, for example. And the idea that a market maker can like list a price they're willing to trade at. If a user trade comes through, then they'll fill that trade. But for some reason, I don't have a very good understanding of why, and maybe we should have Chris on the pod and talk about this, is these prop AMMs can actually update their prices faster than if they were to use the like traditional RFQ systems. And again, I just don't have a good reason as to why that is. I think it may be really interesting if it's true, but like once you update the Oracle price, the pool liquidity will move. And maybe just the fact that that's all on chain, you kind of have like this quicker feedback loop than having to move through some server that probably locks you in for some set period of time that you have to leave this quote as open on these RFQ systems. But again, like take that with a grain of salt. I'm not super positive on how that construction actually works in practice.
Whether you're building DeFi protocols, enterprise solutions, or next-gen dApps, AlgoKit has all the tools you'll need to build faster, safer, and smarter on Algorand. AlgoKit 3.0 now offers native TypeScript and Python support, visual debugging, and seamless testing. Build, test, and deploy with tools designed for speed and simplicity. Start building with AlgoKit today by following the link in today's show notes. This episode is brought to you by Ledger. the global leader in digital asset security. Celebrating 10 years of innovation, Ledger remains the most secure hardware wallet for your crypto and logins, trusted by 7 million users and securing 20% of the world's digital assets. Follow the link in today's show notes to grab your Ledger now. I figured we could jump to the next category. Lending is a big one. One area where I've been interested in, like over on the EVM side of things, that I think has been an interesting shift to see is, Morpho coming into the space, and even teams like Euler and similar that are exploring these strategies using like a base layer lending primitive with isolated pools, and then putting a vault product on top of that, and then even like in looking to expand those vault products, like spinning out different sort of like instances or like branded versions of that for different product teams. We've seen Morpho do this with like Moonwell and Coinbase and a few other different projects to date. It looks like Camino is exploring that, although their vault product isn't quite out yet. I guess I'm curious, like I'm not much of a lending follower outside of, some of that exploration into Morpho. What else is kind of shaking up things up in lending in Solana?
Yeah, for sure. So yeah, Camino is moving toward a modular architecture with their Camino Land V2, but that still hasn't rolled out. I think an interesting protocol like in the money market space is Loopscale. I like Loopscale because they have taken a completely different architecture. Like if you look at DeFi, lending is probably one of the primitives that has become like architecturally stagnant in the sense that you still have the pool-based design that was introduced by Compound back in 2018. And even though you have seen like improvements like with this type of modular architectures in the background, you still have like this pool-based design where interest rates are determined algorithmically based on pool utilization. So what you have is essentially always this capital inefficiency where supply capital will always be larger than borrow capital. And by definition, you will always have a sort of a spread there between the supply APY and the borrow APY. Whereas on Loopscale, you have like an order book based approach where similar to like an order book DEX, what you have is like an order book system that directly matches lenders and borrowers. So by definition, you remove that spread and have better rates both on the supply and the borrow side. And this can unlock like new use cases that were previously not possible in DeFi. For instance, Loopscale offers fixed rates, which is great for more sophisticated borrowers that want to have like more planned out strategies. For instance, you can have structured products like for instance, looping is infinitely better with fixed rates because you remove that the interest rate moving against you. So you can have like more aggressive loan to values and more aggressive leverage. You also enable like more collateral types because if you're like directly matching lenders and borrowers, then as a borrower you only need to have like a willing lender to provide to put up something as collateral. So for instance, you can imagine someone with locked tokens, like for instance, I have locked JITA tokens. I can post that as collateral, and if a lender is willing to lend me with the locked JITA tokens, then they can do that. And they can do like interesting things in the back end. For instance, in that example, you can like for instance not liquidate based on price but based on payments. So if I miss a payment, you can liquidate the JITO position and take like JITO at a discount. That's just one example of things you could do with that. And like the thing today is that borrower concentration is like if you look at money markets today, even on Aave, which is like the biggest money market, like most of the borrowers are concentrated in very few borrowers. So if you can like provide net new use cases, you can easily disrupt that market. And that's one of the things that I'm excited about, like with these type of designs.
Yeah, I really like this. I think the initial episode of the new bell curve season kind of actually touched on this beautifully. And basically, with these more isolated designs, you're shifting complexity away from the protocol and onto the user. And how you pull that back off the user is something like a vault product, right? So now I don't have to manage, if I have USDC and I want to earn some yield on it, I don't have to like balance that out between which pools are being utilized across Morpho. I can just deposit into a vault managed by a team that I trust, like Gauntlet or Steakhouse, and they do all the work for me. It's beautiful. I love the product. I'm a Morpho Power user. I'm very excited for this to come to Solana. I think this is definitely the right path forward for lending protocol and just like yield aggregation as well. I think the other really interesting thing in that kind of vein, this is kind of like veering out of the scope a little bit, but Spark doing this on behalf, Spark has something called the Spark liquidity layer. And basically they take, basically allocated funds from MakerDAO, and then we'll take that and balance it around different pools across basically any chain and any integrated market. And so they're integrated into the Morpho vault where Coinbase is letting users deposit and borrow against their Bitcoin. And that's kept the rate incredibly stable. So we're seeing these like layered innovations actually start to come to life, basically. The idea of money Legos actually does exist. And now we're starting to kind of see it where different protocols are building on top of each other, and different retail user bases are being able to plug into these things, and everything works, and it's working quite seamlessly. So huge fan of the vault direction, and definitely think that's the proper iteration for the lending space.
Yeah, and I think another big call out for this like vault style of lending is that things like Athena's USDE and SUSDE, and then like Pendle PTs have been big drivers of growth for Morpho specifically. I'm not going to go too into the weeds on this one. If we had Luke on, he certainly could, but we've got like RateX and Exponent, I think, are some of the like sort of Pendle equivalents that are kind of building on Solana right now. Where you can get, these PTYT like exposures to different assets. A lot of them are, LSTs, things like JLP, where you can take duration or, grab a fixed rate on something if you think it's, the right time for that. But we could see the same effect where if those markets can grow alongside like new vault products on Solana, you might see a similar effect that we've seen with Morpho, where those PTs have become a big part of that market, which I think would be pretty interesting and might grow that pie a little bit.
Yeah, like in the Ethereum side, you have seen a great like virtuous cycle, like between Pendle assets and Aave, like Aave listing these assets.
Yeah.
I think on Solana, Camino has not yet listed any of RateX or Exponent like assets. Loopscale has done it, and they hadn't had any issues for Exponent. They did have like an Oracle pricing issue for a RateX asset, and they got hacked in their Bolt product for like 10% of the total bolts or the total protocols like TVL, which was not great. But obviously, it's kind of what you would expect with this type of new designs. And just to give an update, the team has been able, like the team communicated very often and very early, and was like super great in terms of like transparency, and have been able to recover that. But yeah, it just highlights like the relative like immaturity in some sense of Solana DeFi relative to Ethereum's in some ways.
Yeah, no, I definitely agree with that. And this was an issue with an AMM based Oracle price. And that lesson has been learned many a times in Ethereum land, and even in Solana land as well. So I was surprised to see that be the core of the issue. Like, I know the Curve finance team has spent a ton of time on, building out tooling so that AMMs can be meaningful oracles. And now they actually have that within their lending product, which is pretty cool to see. But again, they put a lot of effort into that. And so I don't know the full details here, so I don't want to like sling mud by any means. But I don't know. There's just like the importance of learning from lessons past is super salient. And I think the Camino team is pretty vocal about things like this, right? They were talking, I think it was just yesterday, with what the idea of like building a scalable lending product is not a developer issue, is not a code issue. It's an underwriting issue. And you have to be able to price the risk on these assets properly. And that's a challenge, right? That is the core of how you can build a scalable lending protocol. And it's less so about an engineering challenge, which I found to be pretty interesting. And maybe that has to do with their hesitation of listing a lot of these assets, is if they're not, if they can't properly underwrite the risk, then it doesn't make sense for them. And taking that cautious and guarded approach is something that makes a lot of sense. And we've seen it a million times over. the key to success in this industry is surviving and doing things that won't blow you up, which can be hard, right? A lot of your competitors are going to take a ton of risk, and that'll make you feel like you're doing something wrong. Like, oh my God, how are we not getting the same level of growth? Our product is better for reasons X, Y, and Z. And then, 6 months goes by, they blow up for whatever reason. You're like, oh, okay, that makes sense. And then you're still alive and you're not, and your user base will continue growing. So that's kind of like the steady path you need to be focused on staying on, which can be quite challenging. But yeah, they look like a really pragmatic team. I'm definitely excited about their product and its roadmap. And I mean, I don't from even from a valuation standpoint, it seems like a fairly reasonable opportunity. I haven't looked at the market cap or FTV in a minute, or even what their token allocation looks like. But they're definitely a strong builders on Solana.
Another one I want to bring up, though, another category that I think is kind of going a similar path, at least we're starting to see inklings of it, is on the Launchpad side of things. Radium and its Launch Lab product, they didn't get a ton of traction with just the initial launch from their own team, just the Radium Launch Lab version of it, but they have since begun promoting it as like a rebrand Launch Lab with your own identity, similar to like a Morpho Vault style product. And we've seen Let's Bonk.fun kind of pop up as part of that, and the community around it really supporting it. Dan, if you have that data and you want to pull it up, we can talk a little bit there. But I think what we're really starting to see is one, it's like a counterpunch back to Pump Fun, right? Pump Fun, they launched their own native DEX. They took away all that volume that they were giving away to Radium for free. And now Radium is fighting back, and they're saying, well, we could just do our own Launchpad product. But they've taken it one step beyond the simple pump model. They've got some customizability to the bonding curves. You can change up some of the supply dynamics, but then also they're allowing these other teams to stick their name and brand on top of a spun off version of this core primitive, if you want to call it that, and capture a piece of that upside. And then some of the fees obviously go back to Radium. So I think it's interesting to just see this modular kind of approach pop up in another area. And we're seeing that with Launchpads.
I totally agree there. And I last time I checked, Launchpad PumpSwap was still doing, or Pump Fund was still doing 100x the token launches that Radium was doing. But I think it's interesting that they're actually recognizing that it's important to own the end user and are finding ways to go to that direction. For instance, Launch Lab has partnered with some AI bots on Twitter, where you ask the AI bot to deploy a coin for you, and that will deploy directly on Launch Lab. So that can help with distribution in that regard. And I think I completely agree with you. I hadn't thought it in that regard, modularity coming to launch pools. But yeah, I think it's an interesting development.
Yeah, it's an interesting model, right? So they did two things I think that stood out from a I don't know, market structure standpoint, if you will. One is they're pretty aggressive on incentivizing creators with a portion of the revenue generated. So the idea of creator rewards, we see this with Zora as well. About 50% of the total fee that gets taken on Zora coin trading volume goes back to the creators. And this kind of the same model as well, right? If you launch coins, there's a kickback basically. But that's one piece. And the other piece is the idea of it's a launchpad for launchpads in some regard, or it's allows other people to come in, take their distribution and plug it into Radium's backend, and then bring that activity to Radium, which I find to be pretty interesting. So yeah, Bonk's definitely the bigger one of all the subgroups that have kind of launched on it. So if we remove the actual Radium portion here, I mean, yeah, you can see it's basically just Bonk, which makes sense. It feels like a very natural fit for the Bonk ecosystem, right? They've got the trading bot from the Telegram trading bot. They are a meme coin community. So it's a natural fit, and it seems it works pretty well. So right now the Launch Labs product's doing about 3 to 5 million in volume per day, which is down from a higher portion here. But again, you still see on a percentage basis, the Bonk tokens are driving the most volume on this specifically. And yeah, it's down from, it looks like it topped out about $40 million in total volume a couple of days into the launch.
Yeah, and I think Pump Fund, the Pump AMM or Pump Swap, is doing a couple hundred million in volume a day. So there's like maybe an order of magnitude or two in trading activity and tokens created. But at the very least, like, you know, I think Radium has proven like in the immediate term that there is a little bit of a lever here to pull in terms of like grabbing the distribution of various teams, getting them to launch their own Launchpad products and kind of run with that. We'll see what else they have cooking. Maybe there's some other teams that can leverage this as well. Although we also know like Jupiter has the Moonshot stake and Moonshot has its own Launchpad too. I don't know that they've really been like promoting that super hard. Maybe they've got some more things cooking behind the scenes on that one, or maybe it's not a concern for them, but they're technically another competitor, though we haven't seen much from them.
Yeah, good
Go
flag.
ahead.
That's an interesting. No, that's a good flag. I haven't thought about them. I forgot about their Moonshot acquisition. It'll be interesting to watch that come to life. They've been heavy on the acquisitions. They snagged up Drip as well, which Vibu is building. Yeah, that's gonna be interesting to see how they roll that into one product.
AlgoKit 3.0 includes all the tools and open source resources you need to unleash the power and performance of the Algorand blockchain. Access a resilient network with instant finality, consistently high throughput and low fees, and layer 1 features like atomic swaps and native assets. No smart contracts required. Whether you're building DeFi protocols, enterprise solutions, or next-gen dApps, AlgoKit has all the tools you'll need to build faster, safer, and smarter. Start building with AlgoKit today by following the link in today's show notes. Ledger is the global leader in digital asset security, trusted by 7 million users and securing 20% of the world's digital assets. In recent years, Ledger has built a comprehensive ecosystem of products and services, making digital ownership more secure and accessible for everyone. Ledger's newest devices, Ledger Stacks and Ledger Flex, introduce the world's first secure touchscreens, making it easier and safer to manage your transactions and assets. Alongside Ledger Stacks and Ledger Flex, they have also launched the Ledger Security Key app, offering a safer alternative to traditional passwords and enhancing your digital security. Follow the link into today's show notes to get started with Ledger today. I guess another area where Jupe dominates on Solana is Perps. They, despite I think a relatively simple product there, right? There are still only 3 assets available for trade on Jupiter Perps. They dominate Solana's Perps trading volume. Outside of them, we've got like Drift and a few others. I'm curious if you guys have any strong thoughts here. Carlos, from what I understand, like it seems the main consensus is that building a really good perps product is going to require like doing some of that activity off chain or like a new chain or some other means of going about like getting greater scale.
Because Solana as validator set is permissionless, you can't really have like opinionated ordering of transactions. So an issue there is that you don't really have like a good way to reduce toxic order flow, and the market structure the way it works today is that the taker always has like an advantage over the maker, so you're not really willing to provide like the tightest spreads possible. So you always need like kind of a like an off-chain component to provide the best liquidity or the best pricing possible, and that's why you see like products like Hyperliquid dominate, where you have like a permission validator set and you can order transactions much more efficiently and prioritizing cancels a lot better than in Solana today, which is part of like the roadmap, but it's not something that's like immediate and will take a lot of time, in my opinion. And yeah, in terms of like new developments, I think it's interesting to see Jupiter like only having like 3 assets still, like just BTC, ETH, and Sol. Uh, but I was looking at a report like by Mark, and an interesting thing is like if you look at Hyperliquid, 90% of the volume also comes from these trading pairs. So it makes sense that Jupiter like still dominates volumes, despite them only providing like these 3 trading pairs. Because I was one like of the opinion that a key like requirement for a person to succeed is to continually list new assets, and that doesn't seem to be the case with Jupiter, at least to dominate Solana purse volumes.
I think that's a fair point. I would imagine though that Well, I guess some of the value for Hyperliquid is probably its efficiency, and you can trade at much greater speed than you could on Jupiter Perps. But certainly listing new assets is part of that. But I think you're right. Like this power law effect is always going to be a really big factor. Though naturally, like to appeal to like maybe lower volume or like these retail focused traders who might want to make use of the platform, offering up some of those, if you want to call them longer tail, lower liquidity assets for perps trading, it is probably a little bit of a lever there. Like we know for Hyperliquid, there's PvP trade, which is basically a Telegram bot, but it allows you to trade perps with your friends in a group chat. And that's they as a team have been pretty successful. I think they've done over 7 million in revenue since their launch last year. So, and that's on like a very low take rate, like 5 bips or less, depending on your tier or your level on the platform. So, there's definitely ways to make money on those lower things. But yeah, that power law effect at the top level, like BTC, ETH, Sol, pick your top favorite assets. It's always going to dominate the spectrum. It seems like.
Yeah, I guess like the counterpoint to this chart is this is exactly what the DEX landscape looked like 2 years ago. And as we talked about, someone came in with some new tech, one, and two, the market structure changed a bit where users were doing different things. Right? Meme coins became huge. They weren't that big of a deal 2 years ago on Solana. Today they are. So that brought in Pump Fun, and Radium has been crushing it. And then the tech changed, and we have these prop AMMs like SolFi that have the power to shift the landscape themselves. So I feel like that's the kind of the counter point here is if we had any lessons learned as maybe Solana becomes a better place to build an order book that could change the landscape here. Drift's probably best positioned to capture that. And maybe that's what would shift the distribution of this data.
Yeah, I think that's a great point, Dan. And I know that I don't know how much of this is being talked about or if it's just like in GitHub discussions at the moment, but like ideas or like conversations about trying to make some future upgrades to Solana to like maybe prioritize cancels, like change how the chain prioritizes different types of transactions to make this more feasible to like run an order book on chain. And like you're saying, if that's the case, then like Jupe would not necessarily be the winner there if if they're not looking to scale Jupiter Perps beyond what it looks like today.
Yeah, I mean, they announced like the Swift protocol, which is like kind of like runs an off-chain auction, like to provide the best pricing possible. And then in terms of Solana upgrades, I think Max Resnick at Token 2049 talked about like switching Turbine, which is like Solana's block propagation system, from single leader to multi-leader, which I don't know like the exact technical details, but it would enable like the chain to prioritize certain types of orders at the application logic level. So you could prioritize, for instance, cancels over taker orders in a way that market makers will not be picked off and can now provide like better pricing. So I completely agree with Dan. Like the landscape can absolutely evolve a year from now, 2 years from now, and Solana can improve in a way that order books are now possible and perp dexes can provide like the best experience possible. I'm also really excited in a way about Atlas. Like the Ellipsis team is very, very good. And I think like technically we saw what they were able to achieve in 6 months with SolFi on Solana. So if they're able to control also the infrastructure with opinionated ordering of transactions with their Atlas L2, I think they can do some very interesting stuff in that camp.
Love it. I think those are all the big categories that come to mind to me, unless you guys have anything else. But I think maybe we go in reverse and close out and look at the big picture, kind of talk about where Solana's at now. I do want to pull this up. I know we pulled this data just to show it, but we're continuing to see Solana, like the ecosystem, really dominate on the app revenue side of things, like as a percent of the like broader market of applications. Obviously, a big portion of that is a lot of the meme coin related trading activity that was discussed. Pump Fun has been a massive winner and continues to be a top application by revenues month over month. I think Ryan Connor's metric, something about like 13 months of consistent, like top 1 or top 2 application by total revenues. But either way, this dominance has continued. Just it makes you wonder, like, where we go from here. Like, what's coming next? Is it just keep scaling IBRL, more revenues, but maybe take rates continue to compress a little bit, but if overall activity increases, everything still continues to look quite profitable, or at least revenue generating.
Yeah, for sure. I mean, for me, application revenue on Solana has been impressive. Like, for context, Solana flipped Ethereum as the leading chain by app revenue in June of last year and has retained that spot ever since. Today, it accounts for almost like 50% of total app revenue across all chains. And one of the things that I find incredibly interesting is just the ratio between application revenue and rev. So if you look at rev and compare it to app revenue has increased a lot faster than rev, to a point where today Solana apps make $1.85 for every dollar generated in rev. So almost 2 times more application revenue than real economic value or operator payments, like for the people that maintain the network and stakers. And that wasn't the case like a year ago. A year ago, Solana apps generated about 80 cents for every dollar in rev. So to me, that highlights just like the increasing product market fit of Solana applications. And at the end of the day, like Dan always says this, but like businesses within an ecosystem are at the end of the day like the ultimate indicator of success for a network.
Yeah, I think the challenge for Solana, like, I don't know, if you put me as stuck me on the foundation tomorrow, like what I would try to be doing is diversifying away from meme coin trading and not diminishing it at all. I want to aggressively continue to scale that sector. I think it's a very important sector for blockchain, but like you just need some diversity around there. And so one of the verticals I actually think is the most interesting for this, RWAs are definitely interesting, but I think Bitcoin, bringing Bitcoin onto your chain is actually slightly more interesting. So hear me out. Like, okay, what is an RWA really? It's a store of value, right? They're largely dollar based. So you can definitely bring stocks on chains and things like this, or tokenized, Series B equity. It would be a really interesting thing as well. That's a totally different category I'm thinking about. I'm thinking about like dollarized products and Bitcoin. So these dollarized products, they tend to be extremely low velocity. If you looked at BUIDL turnover, it'd be incredibly low. It's basically just Athena using it as a backend for its yield product, which is great. I think that's an important role you play within any ecosystem. But when you think about generating REV or generating application revenue, it's just it feels like a slightly different dynamic. Where if you look at Base today, about a third of all DEX volumes are driven by Bitcoin products, largely CBBTC. Very natural interplay there. Wrap Bitcoin is launching on Solana, I think, this week or very shortly, which is pretty interesting. I think they should make an aggressive push for CBBTC as well, or any other like large Bitcoin wrapper.
Yeah, to add context there, like Coinbase CBTC launched last year on Solana, and it has like around $270 million in market cap today. I think it is almost as large as like Wormhole's Wrap BTC, which has like 300 million in market cap on Solana. So those two are like the largest Wrap Bitcoin products. Like collectively, they make like, I don't know, like $600 million in market cap. Like one of the interesting things about Bitcoin DeFi on Solana is like it used to be huge before FTX collapsed. FTX had like the BTC Wrap Bitcoin, and that at its peak was over $1 billion in market cap. But when FTX collapsed, it obviously went to zero, and then there was a huge like trust that was lost on users, and that Wrap Bitcoin growth never recovered on Solana to where it was before. So I think that's like a path dependency kind of thing, where like that's one of the few areas where you really haven't seen a recovery to pre FTX levels, and you are seeing teams try to recover that. So the other small protocol that Dan was referring to, I think, is SUS Network, which launched the CBTC product on Solana. It's It's kind of like a decentralized play on Wrapped Bitcoin that has around like less than $20 million today in market cap. So it's still relatively small, but they have launched like a 3-month liquidity campaign with Camino to grow like on-chain liquidity for CBT. But their rewards are actually really small, so I don't think they will be able to like really compete with the centralized wrapped Bitcoin providers. But I definitely agree with Dan that this is a huge area of growth for Solana DeFi potentially, but more so for money markets. And so I was looking at this like I think last year, and if you look at the way wrapped Bitcoin is used across Ethereum, for instance, which is like the largest ecosystem for wrapped Bitcoin today, most of it is deployed on app and money markets as collateral. Because if you think like, what do people want to do with their Bitcoin? They don't really want to risk much, like with their Bitcoin holdings. And so the most natural thing for them to do is like just deposit them as collateral on a money market and go lever long the thing or just earn some yield on it. But beyond that, you don't really see a lot of use cases. So I kind of will actually disagree that it would increase Solana's rev significantly, because most of Solana's rev today comes from trading activity, especially like for contentious transactions, and for Bitcoin, I don't really see it that way. I more see it like as a product that would be sitting on money markets but not like actively contributing to the ecosystems like real economic value.
So here's why I think it's a little bit different, right? So a RWA, there is no arbitrage to be had, largely. It's basically just $1, but Bitcoin is an extremely volatile asset that is also viewed as a store of value. So you get the volatility aspect, and then if you have deep enough liquidity, you're immediately competing for BTC price arbitrage. Every chain is kind of competing for that. It looks like Base and Ethereum are kind of like leading the way there because there is no exchange to arb against on Bitcoin, right? So like there actually is that aspect which RWAs don't offer, which is why I kind of find it a little bit more interesting. And Lombard was that other protocol I was thinking about, but I don't actually even know if they're launching on Solana, but they're doing something in the Bitcoin space as well. So yeah, I think it gives you this like, because it's viewed as a store of value and because it's also volatile, it's like a very strange combination you don't really find in the wild. It's a bit of this golden goose. So I don't know. I think it's a really interesting vertical that is largely underexplored across most chains because it's very hard to do. Most Bitcoiners don't really want to move their funds anywhere and don't care about like smart contracts and DeFi. So the question is like, okay, now we're over the last 5 months, the regime has actually changed quite a bit in that like, you know, the US is talking about like how Bitcoin is an important asset. That has never happened before. This is arguably the 1 or 2 most important economies in the world. That changes things. And maybe that does shift, maybe not like the hardcore Bitcoiner perspective, but some of the individuals that are already like interacting with blockchains today, like, okay, yeah, you know what, if the US is doing it, important economies are doing it, why would I not do it? And then that kind of like scales in from there. So that's one thing that's kind of the angle I was thinking about.
Yeah, it would help. Well, maybe it would be good and bad in the same way, but you know, at least with Coinbase, they're able to like very selectively build out a strategy here, and the growth of Bitcoin and CBBTC on the chain has been like as part of a broader strategy. You know, they're doing Bitcoin backed lending that's done via Morpho on Base, so they're kind of driving a little bit of a flywheel there by one, you know, you make wrap Bitcoin, CBBTC, put a bunch of it on Base, then encourage your users to do some lending and get involved in that ecosystem a little bit, which is a great strategy. But we don't have like, you know, there's no FTX anymore. That's probably a good thing. But if one did exist, you know, they could attempt, you know, a similar strategy and you know, really target assets and within the ecosystem like this. But maybe from a different lens, Dan, because you mentioned like expanding beyond meme coins. I think it's kind of I agree with you, but I also think it's a little bit funny and maybe even ironic to like share this chart and look at the growth of stablecoin supply on Solana and point out that the massive like 2x spike back in January was fueled explicitly by the Trump token launch and associated token launches that just fueled a bunch of capital coming onto the chain to trade the coin. So maybe all we need is, or all Solana needs really, if it's a Bitcoin related thing, is one particularly exciting exclusive event that encourages a ton of people to, pump some Bitcoin liquidity onto the chain, or, make use of a new protocol and get some action.
Yeah. It's like stables and like dollar RWA products are like a really good underpinning of your on-chain economy. There's no doubt about it, right? Like even just think about like a meme coin user, right? So they're actively trading. Something happens, like, okay, like I'm gonna take my chips off the table. I gotta go on a family vacation or whatever. Who knows? What are they gonna hold? Either the native token of the protocol or of the chain, or stable coins. And if they're holding stable coins, that like you actually give them this ability to do so. They don't have to incur slippage while they're trading in and out of it. It's a very natural piece of the trading economy, even especially on the meme coin side as well. And then of course you're just fueling the ability to have a lending activity, and that underpins a lot of other economic activity as well. So I definitely think they're important. And you're right. I think it's a pretty salient point to point out what the giant candle on this chart was driven by, right? It is very true. Yeah, I don't know. I'm just trying to like ration about RWAs as a whole. Like they're obviously not bad in the context of like building an economy. There's no doubt about that. That's not what I'm trying to say, but like how good they are is the question I think is worth measuring, right? Like a lot of these deals are, I don't know if there's incentives related to them, but it seems like, they'll get parked on a random chain. Like Stellar doesn't do a ton of activity at all. It has a very meaningful amount of RWAs issued on it. So like, what does that mean in practice? Is Stellar more valuable? Like that's the question that I think we need to be thinking more critically about, because when I look at a lot of these announcements and then look at the tokens on that chain, they are literally just sitting there, and it's like, okay, you got the announcement, you get the stamp of approval from like a large bank or a large, like Apollo has tokenized a fund. That's huge. That's really important. But what is it unlocking for the issuer, and where they want to continue doing it, are questions that I don't think have clear answers to today. And so like, what is the ultimate benefit to the chain that wins that integration? It's a little bit unclear. Like, yes, it's good, and yes, you get the announcement, but like, what is that doing for your on-chain economy? That's where I'm just a little bit hazier. And so when there's velocity around these things, it's very obvious, right? If there's velocity, they're probably being used across DeFi, and it's like, okay, cool, people want to interact with it and can interact with it, because that piece specifically, I think, has a little bit of like it's got not a little bit. It has a huge regulatory headwind, right? If you bring equity on chain, there will be KYC, and no DEX today will be able to allow the transfer of that asset. And there'll be ATSs that need to come online and build on top of blockchains to facilitate that trading activity. And so basically every DEX is a loser. I think the winners are probably lending protocols, because even with like super state assets today, you can whitelist certain smart contracts or programs that your assets can interact with, and lending protocols can be on that list. DEXs cannot be, which is an interesting dynamic as well. So I don't know. That's just, I think the RWA stuff sounds really, really good from a high level, and you start picking back the layers, and you're like, okay, like where is the actual pocket of outperformance going to be? And I think that's a harder question to answer, but I think lending protocols are honestly the winners.
Yeah, I think that's a really interesting take, and I think I mostly agree with you. I think you could view it as this thesis of like payments being a loss leader, like for blockchains, and trading taking the majority of the value. And I think RWAs won't be beneficial in that way for chains until they are actively traded. They're like for price discovery and stuff like that. And you also have to think about from the point of view of the issuer. Like today, if you're issuing something off chain and issuing like a twin on chain, you're just adding cost. Like you're not actually incurring any benefit. I think we need like to get to a point where people are issuing things directly on chain, not like twins of the physical world, and then actively trading that on chain. And that way you can actually get like a flywheel effect for the blockchain. Because at the end of the day, trading is where the majority of the value comes from for Solana or for any other blockchain for that matter. You don't actually gain anything from idle capital just sitting there.
I think that makes a ton of sense. It's a great point. Maybe the one last thought I have on it is like it opens up this question of, when we get to the point where these things are being issued natively on chain without some TradFi equivalent serving as the backbone, i.e., in other words, in a future state where TradFi is just directly using a blockchain or blockchain technology for the issuance process. does that happen on an Ethereum, a Solana, or a somewhere else? I think that's unclear. We're kind of like stepping our way into that future. That's regulators are starting to talk about some of these things, right? Stablecoin bills, market structure bills. Robinhood is stepping its way in. BlackRock Biddle and some of these other things. They're stepping their toes in, right? A couple $100 million, even a couple billion is not very meaningful to asset managers with like trillions in AUM. So we're just really like super early stages of this stuff. So, but I agree with you, Carlos. Like it's going to be very different picture when things are being natively issued on a chain versus issued somewhere else, some database or some TradFi office, and then get a copy created on chain as well to act as an intermediary to trade alongside other things that are happening on chain today.
Yeah, I think we got a draft of the market structure bill just now. Actually, Ian Unsworth sent a sketchily named PDF into the group chat, so I'm not clicking that, but I got to confirm this.
Yeah, I think another thing is just who's buying these things on chain, right? Like who's actually like, where do you see demand on chain for like, I don't know, like money markets. Wait, Mark, a note here. I blanked out. What's the name of this thing?
Like a T-bill?
Like a T-bill, yeah. Like, like where do you see on chain like demand for treasury bills? Like if you look at the largest like tokenized treasury bill today is like BlackRock's Biddle, and the largest buyer of that is Athena. So I think that you can see some interesting like uh, synergies like between like DeFi native apps being like buyers of like centrally issued like T-bills, and like some interesting products that can come out of that can increase like the relevance on chain.
Yeah, and that's like the second order effect of having these assets, right? It's like no, Biddle's not super high velocity or high turnover, but maybe SUSD that builds on top of it is, and maybe that's what provides the value, right? So they're certainly good. I'm not even trying to bash that at all, but it's just interesting to kind of think about how they will drive value. And I guess it's like a closing level thought. It's like, Ethereum is now really focused on scaling, and it has this like massive pool of capital, right? If you look at like RWA distribution, if you look at stablecoin distribution only, if you look at app TVL, DeFi TVL, they are dominating in all of these categories. And now they're trying to back into the performance piece. And then somebody like a Solana or a Sui or an Aptos or some of these newer chains are going the other way around. And they've built the performance piece first. And now you have to kind of like back into getting that capital. Both are going to be really, really hard challenges to solve. But you kind of have like the opposite rotations happening. And it's going to be interesting to kind of figure out where that line lies of how much performance is enough for Ethereum given its massive capital base versus how much capital is useful for Solana given its insane levels of performance. I don't like those won't be the same line in my mind. So that's like the really interesting question I'm trying to answer as well.
I think that's a great takeaway. Before we close things out and before we do closing statements, one last shout out for permissionless 0x10 link in the description, 10% off tickets. We want to see you guys there. We'll be there end of June. It's coming up. It'll be in New York. Dan, what do you want to say about permissionless?
I'll be there. Come drink some beers.
Carlos, any thoughts about permissionless? Your favorite thing?
I really want to see Boccaccio like on that thing, yeah.
And I bet a ton of people in the Telegram also want to see Boccaccio live. So, and if you're not already in the Telegram, the link for that is also in the description. Be sure to join if you're an avid listener. Hop in there. We'd love to chat about all things markets. You can get more insights from all the gigabrains that come on the pod, poke them with questions, or just shit post in the chat like most of us do. And maybe one shout out for the newsletter as well, the 0x Research newsletter. We put out content daily during the week. Just some additional insights and thoughts on the markets. So awesome. Thanks for coming on, guys. This was super detailed and deep into the Solana ecosystem. I'm sure Pepe Rodriguez will seriously appreciate that. If you guys have other thoughts about what we should be talking about, what we're not talking about, let us know and we'll consider it.
Awesome. Cheers.
Awesome. Thanks for coming on, guys.